Hi, welcome to the Market Alert for Tuesday the 6th of June 2017. So yesterday in the British pound, these are the recorded trades live from yesterday. You can see the market sideways in the pound. Potential buy signal there wasn't filled. Market was sideways. As I said in the Market Alert, we're running up towards the UK elections this week, so I'm not expecting too much from the pound, although it did move higher yesterday, and no surprise there. If May gets in, then we'll see the pound move higher. If Corbyn gets in, then we'll see it move sharply lower, would be my guess at the moment. So another potential buy signal. This is then filled, the market drives higher, and then we'll see the market hit the scalp. It doesn't drive through the scalp, so there's no reason to hold the trade any longer, because we've not got a driving bar through the scalp. We need to see the market drive through there to trigger holding the potential trade there. And that was the only trade on the pound yesterday. We had another one which wasn't filled, and then it was on to the Dow. We had a potential sell signal. A very interesting price bar here. I'll just show you this. Keep an eye on these volumes here. You can see that the range from the high to the low of this bar is greater than this one. And as the market trades sideways, they're doing their damnedest to buy this market back. And I know that because if you look now, you can see the volume is greater. The range is narrow, there's some buying pressure, but unfortunately the selling re-enters and they say, well, okay, let's just let it fizzle out by itself, see how far down it goes, and you'll see there the market is instantly brought back. Selling out of the way, market sideways, we have the news, and then we have the buy side to recoup some of the losses. And once again, you can see the market doesn't drive through on any increased volume. Volume is fairly low, market stopping at the 20-point scalp there. And then the remainder of the session was sideways. You can see a potential sell there, not filled, another one there, not filled, another one there, not filled, and the market just continues to trade sideways. And in the end, I turned off the computer half an hour before because it was just stuck in this sideways range there going into the evening session, which I did warn of yesterday, and the same again today. Expect the market to be slightly quiet. It's Tuesday. The market's notoriously quiet for a Tuesday because the market's factored in the news from the weekend. So on the overnight, the market has actually moved lower by 50 points, which you can see there. We've got the remainder of yesterday's evening session. Market did nothing, then it dropped after, then it's made its way lower. And in the daily chart, this is how it looks. We've got the market showing a bit of weakness there, which is very interesting. Let's see how that pans out when we get to the main session. If the market's lower, see if they can manage to bring it back. Like I say, they want to keep the market on the highs at the moment, but we will get a sell signal at some point that will snap to the downside, and that's always the dilemma. But the good news is we can always measure it in the daily chart to see how far the market's going to retrace, and then get in there as well, so you don't have to worry about being in or missing out, as it were. In the news, that's all we've got today. 3 p.m. we've got the JOLTS openings, and that's a medium impact news item, so there's not a lot to move the market. Even the news yesterday that Qatar has been sidelined by Saudi Arabia for its favoritism shown towards Iran, etc., didn't even make a jot of difference to the market. So again, all bad news is good news as far as the stock market is concerned. And on the pound, overnight, we can see the market sideways to high. You can see that it moved through yesterday and continued higher. then ran out of steam, market coming back and just finding support here down at this psychological level there of 129 before the market moved back to the upside. In the daily chart of the pound, we can see that we've got the uptrend being resumed here after the recent correction. You can see there market came down and now it's heading back. It's got to take out the recent highs if the market's to move higher, but like I say, keep in mind that we do have the UK election on Friday. And in the implied volatility in here, we can see that we've got the market moving up slightly yesterday, 856 from 801. For me, I would say that this is the lowest it's going to go. I think the low is in on the implied volatility, unless the market can make one more run at the all-time highs. For me, that is now in, and again, this is multi-year lows for the implied volatility, which preceded the 2007 correction and 8 crash. So again, it's all pointing in that sort of direction. Also in the volatility index in the VIX, I'll just bring this one in for you. This made a new low on Friday. You can see there market coming back and retesting the low. So again, in here, if you go back, you will see that we have these major lows in the volatility, and again looking for the volatility to actually pick up as the market moves lower in the underlying market. And then finally, a quick look around at what's making the news. One belt, one road and one debt hangover for the Chinese there. They've got a major problem. They're trying all sorts to keep the illusion alive that everything's fine in the Far East. Even more madness here. Canadians rush to cash in on Toronto's massive housing bubble before regulators kill it. So a touch of the old FOMO there, fear of missing out. Again, all of these things pointing towards massive bubbles. And here we've got this only ends when the bond market pukes. Very interesting one there. And as it says here, that betting against them is betting against history, and that's because central bankers love to inflate their way out of these things and destroy your hard-earned cash. We've also got here that the Democrats also plot debt ceiling fight. They want to shut down the government as we head towards the late summer. They've already agreed at a 1 trillion earlier in March, when we were going to have a problem that was agreed. And then path to inflation, helicopter money. If you're not aware of this, last year there was a lot of talk about this, that instead of, as it says here, the playbook, free money for financiers, i.e. the banks being bailed out, this time the money is going to go direct to the consumer to spend in the form of a fixed income. Don't see this myself, but you know, the market's been mad for 8 years, so who knows, or sorry, 9 years, so who knows what madness that the central bankers might have planned for us. So there you go. As I've said, they've wanted inflation for a long time. They didn't get it with QE. All it did was inflate bubbles in the stock, bond and housing markets, and the 1% became even more better off than they had before. So where they want real inflation is to destroy the masses and the only way they can do that is to actually give them money direct, which wouldn't be a surprise. I know they were trialing this in one of the European Nordic ones, but I can't remember which one. I think it was Finland. Do some research and have a look at that. So yeah, keep an eye on all of this as things start to unravel going forward, late summer, early autumn, and hopefully we'll get a bit of volatility before that as well. Just to kick up to around the 10% area would be nice to get some really good trades in the 10 to 12% area, because the market then drives through the scalp and allows you to actually trail, and that's what makes it slightly difficult at the moment because of the lows in the implied volatility. And in the pound, of course, we're waiting for the UK election. And if once that's out of the way as well, if, like I said earlier, if May gets in, pound will rally initially, and if Corbyn gets in, it will crash initially, and there'll be some good trades there either way. Right, that's it. I will report in as anything to report in about. As you know, I don't trade in Tuesday evenings out with my wife ballroom dancing, just to get a break during the week and to save any sort of divorce fees. That's it. I will see you in the next one. Thanks for watching.